Hello everyone, welcome to our fourth Lucksury Talks. Today we're joined by the incredible Ron Austin, director at AARC and a seasoned mortgage expert with over 28 years of experience in the industry.
Thank you for having me.
Thank you so much for being here with us
So nice
today.
to be in Miami.
Yes.
Yeah, a little from the chills and the cold to the sun. We went from 30 to 80 in 2 hours. So that was great. So happy to be here. Thank you for having me.
We are very excited to hear from you, to get to know your insights about the current stage of the mortgage world. Ron, with over 28 years of experience, you have seen it all. What are some of the unique challenges or opportunities that homeowners and real estate investors face in our market today?
All right, so we're going to answer that easy. Well, let's break the question into two parts because you asked it in two parts. So first of all, let's talk about the opportunities, right? So the opportunities is I think we're in a little bit of a slow market. We just came off of, I say, 2.5 years of high rates. So a lot of people were stagnant. A lot of people were sitting on the fence waiting for something to happen. I think we just went through an election cycle. We have a new president. A lot of people are super excited. A lot of people are super scared. Nobody knows really what to make of it, but I think it comes down to there's opportunity because where people are scared and people are nervous, I think it creates opportunities for people to engage, find something you like, negotiate a good price because there's not too many people right now knocking that door down to buy any specific piece of real estate. So I think that the opportunities are vast. The inventory is a little light, but if you do see something you like, I always suggest it's a great time to take that opportunity and buy because once that property is sold, you may not have another crack at it for several years. And to answer the second part of the question is, what was the challenges? So the biggest challenge today, I think, is, first of all, we're challenged by high interest rates, right? And everybody knows that. Everybody's waiting for those rates to drop, right? The federal government, as far as the prime rate, has not dropped. Powell said he's not dropping it in the last meeting. Who knows what he's doing the next meeting? The president has voiced his opinion that he should cut the rates because he will stimulate the economy, but who knows what that's gonna bring. So we just, we still have an old regime guy and a new guy, and they're still kind of hashing things out. So I think that the challenge is really, the biggest challenge for home buyers today is just getting the right rate, right? And that's all gonna come down to now be smart. If you're playing the waiting game and waiting for the market to change and give you that rate, make sure your credit scores are super high. Make sure all the bills are as low as possible so that you can maximize your buying power. So don't go rush to go get that brand new car and add $3,000 a month to your payments, and don't go rush to go buy some expensive stuff with revolving payments. Settle down, get your finances in order, and those rates will drop. And when they do, that's the opportunity. And that's how you overcome a little bit of the challenge.
I love that. And do you think with the tariff situation that this is going to get affected in some way?
So let me tell you about my opinion on tariffs. Everybody has a different opinion. I'm no economist, but I studied business in school, and we know how tariffs work. Now, since we know how tariffs work, we also know how Donald Trump works. Now, no one's gonna say this, whether you like him or you dislike him. He's nobody's fool. He's a businessman. And he said, if you looked at his interviews from 20, 30, and even 40 years ago, when people on both sides of the aisle loved him because he was giving everyone checks as a donor, and now everyone, he's the president. You remember those days, right? So I think that, in the past administration, Janet Yellen from the Fed said that the inflation is transitory. I believe that the tariff and the whole tariff situation and all the, the tightness in the market regarding the tariffs, I think is transitory. I
agree with you 100%.
I mean,
100%.
Everybody, look, at the end of the day, if you have a brain in your head, you understand who's the number 1 consumer in the world. It's the United States of America.
Yes.
So if the United States of America stops buying the goods, China will crumble, and I think every other economy, Europe also. I mean, where are the most European cars sold? In America.
Yes.
Not in Europe, right? So I think it's transitory. I think this too shall pass, and everyone is going to forget that there was, all this pressure.
I agree with you 100%. That's very interesting because I know a lot of people, they are scared.
Very,
They're like,
yeah.
and you just said something, when people are scared, there are opportunities.
Correct.
For the ones who aren't scared.
Correct.
So,
Correct. Listen,
so,
one guy's loss is another guy's gain, and that's the stock market today. It's you watching the 401ks and all that tumbling. I said, who cares?
Yes.
Unless you're 62 years old and you're planning on retiring today and cashing your chips, you have a little bit of a problem. But everyone I know that said, hey, I had 1,000 shares of Nvidia, well, I'm going to go buy 5,000 shares right now when the price is repressed. So it's all a matter of perspective and how you see the market and what's your game. Is it a short-term game or is it a long-term game? So, it's all about perspective.
I like that. Okay, Ron, let's get into your stuff. You're also known for your outside-the-box solutions, especially for clients who don't fit the traditional mold. Can you share an example of a very creative solution that you brought to a client that was facing financing challenges?
Absolutely. I love to discuss a couple of fun scenarios. So the problem when you deal with clients is that they come to you and they have a certain objective in their mind. And in their mind, they also have a way that they think they're going to reach this objective. And sometimes what they're thinking is absolutely backwards, right? Because when you go and buy a car, it's a process. When you go take a student loan, it's a process. When you go buy a house, it's a process. Now, when you're buying the house for the purpose of, I'm going to live there, that's one process. And when you're buying a house where I'm not going to live there, it's going to be an investor property, that's a different process. The problem with today, brokers today, most of the guys that are out there who are a little bit younger and inexperienced, is they haven't gone through so many cycles and they haven't seen all the programs, and they don't really delve in, taking the customer ideas and the customer's objectives and kind of catering to that guy's objective. So what I've learned most in this business is to be a good listener. So when the client's telling me, here's my objective, I need $3 million. And I said, here's my idea. I want to take this $3 million, and he starts telling me about all these different ways that he thinks that he's going to get this $3 million. And then I start asking a better question. I said, let's put that on hold for a minute. I said, do you own any real estate? And he said, yes, I do. And I said, well, how many pieces of real estate do you own? He said, 6. I said, how many of those pieces of real estate are residential? And he said, 4. And I said, do you have any mortgages? And he said, no. And that was it. And that was it. So what I did is I just took my creativity and I said, look, let's take one of your houses, one by one, and tell me what they're worth. And then we dissected one by one what they're worth. We ended up doing one house. It was in Miami Beach, coincidentally. It was worth $6 million. I ended up doing a loan on that, giving him $3 million on that. It was the cheapest, fastest, and easiest way to go.
Amazing.
So that's just one way of getting creative. So, and again, what differentiates, you may be looking for a business loan. Those could be costly. Those could take a lot of time, and those could involve a lot of papers, right? And paperwork. Where the loan that I got for the gentleman was a no-income verification loan. I know we're going to talk about that probably later. He didn't have to show me any taxes, and we didn't really delve into his whole personal affairs. The house is 6. The valuation came in strong. We got 2 appraisals in. They both confirmed $6 million. He has $3 million all day long. 30 days, here's your money, goodbye.
Amazing. 30 days.
30 days,
Imagine.
done.
That's amazing.
Yeah.
Ron, with the rise of non-QM loans, what will you say to a potential home buyer or a business owner who's hesitant about choosing this option over conventional loans?
So let's talk about non-QM, right? The word non-QM to most people is foreign language. Like no one really knows what a non-QM loan is. Like if you're a consumer and you want to buy a house, you think for the most part, if you go to a traditional mortgage shop, you basically are going to get asked the same question. Show me your income, your assets, and your credit, and we'll decide if you qualify. Okay, that's great. And let's just say that that works for 50% of the people. Now take the other 50% who, when you look at their paperwork, their tax returns, you look at their tax returns, they're not so pretty. They don't even show you anywhere near what someone needs to make to qualify for the loan. But he is self-employed. He does have his own business. He runs some sort of, entrepreneurial company, and the tax returns in those instances usually never show what they're supposed to. So that they came up with the word non-QM. This word was invented, in fact, after 2008 when the market crashed,
Okay.
because there were what's called qualifying mortgages and non-qualifying. So the word came up with what is the definition of a non-qualifying mortgage. It's a mortgage where you don't have to substantiate your ability to repay.
Okay.
But then the government frowned upon that and they said, no, you do have to substantiate your ability to repay. And what we came up with was a kind of a hybrid solution of where you would qualify, but you would qualify differently. However, the agencies, which are Fannie Mae, Freddie Mac, and FHA, will absolutely not buy these mortgages. So 100% not buying those loans. So what do the people do? They run to these mortgage brokers or banks, like, you know, the big banks, the Chases and the Bank of Americas, and because they have some kind of account and they have a lot of money in the bank, they assume that the bank is gonna, you know, treat them well and they're gonna take care of them. But it's irrelevant. You can have $100 million in your bank account. If your tax returns don't support a $5 million loan, you're just not gonna get one, period. It doesn't matter how much money you have. And usually people get strung along, they waste a month or two, and then they find out the bad news. Sorry, we can't do your loan for you. So non-QM evolved from that. And I think that the non-QM caters more to the self-employed person who doesn't really matter what you look like on a piece of paper called a tax return. It matters what you look like. I mean, you're an entrepreneur, you're buying a house for $1 million. You know your payment is gonna be $7,000 a month for your mortgage. Can you afford it or not? You know if you can afford it or not. But your tax returns might not reflect that you can afford it. So there's a big differentiation in the market between non-QM and QM, which QM will call them conventional loans and the non-QM will call them outside that box. And me personally, I love the non-QM business. It's my favorite. I've been doing it since 2005. I mean, we've always done non-QM loans. I mean, that's as long as I've been doing these things. The name kind of evolved. It used to be just called the no-doc. And now they made it cool, non-QM, right?
Yes.
I mean, it's a no-doc loan. We can get very deep into the no-doc loans, but I think for the most part, it's just an alternative way of getting financing. So even if you have a person, you're gonna laugh, that qualifies, almost. You almost qualify. Your debt to income ratio is almost making it. You almost got that bonus. You almost, forget that. No paperwork, just do a no-doc, buy the house, get in there, you own it, sit tight for a year, make more money, or next year the rates go down, you refinance. The key is home ownership is the pinnacle. You wanna see the house that you wanna get it. So the non-QM, just for me, it's another angle, it's another option to give the consumer to be able to buy that home that they want at the time that they want to buy it, regardless of what they showed on that income tax return for the past year or two.
Okay, Ron, in your experience working with small and large commercial real estate transactions, what are some of the common mistakes clients make and how can they avoid them?
Absolutely, I'm happy to talk about that. So I have two companies, as you know. My first company is Austin Associates Realty Consultants, and that company does mainly all of the commercial business. And commercial can not necessarily mean like a building or a warehouse or some apartment building. It could mean a lot of different things. So let's call a commercial transaction could be you're buying a fourplex.
Yes.
And that's a commercial transaction because you're not going to buy it in your name. You're going to buy it in some sort of a corporation or an LLC or a trust of some sort, and you're going to basically vest title in that vehicle. And if you're doing that type of a transaction, the main concern or the main issue that you're going to run into is people think that what they earn on their tax returns or what they show that they make as a person, as a human being, matters. It really doesn't matter. It's zero importance what you make because you're not the person that is qualifying for the mortgage. Your property is qualifying for the mortgage. Your rent roll is what qualifies to get approved. So if your rent roll is zero, the chances of you getting a commercial mortgage is zero. You would have to go first get a bridge loan, which is kind of an in-between when the house is not producing and the house is going to produce. You'll get that bridge money, and then at some point, when you stabilize the property by getting your tenants in and showing you have a positive cash flow, then we could revisit and get a commercial loan, a standard commercial loan. But it's all about the cash flow. So the entity has to sit on its own legs, and the building has to qualify as if you're not even there, right?
Yes.
And if you don't meet those criterion, then you're not going to get a commercial loan. Now let's flip that. Now you're a consumer, right? And you basically want to buy a house, or you want to buy a condo, or you want to buy some residence for yourself to live, or even an investment. That's a whole different story, because if you're going to go the conventional route, you're going to have to put it in your name. If you want to go the non-conventional, the non-QM we just talked about, you can actually vest the primary residence in an LLC or in another vehicle should you choose to do that. But you're going to qualify based on your own ability to qualify. Again, the non-QM, you still have to qualify, but it's non-QM, right? So you have to have like your accountant write a letter and say, Mr. So-and-so owns his business and he basically has owned it for so long, and then we verify that information to all be correct, and you would get the loan based on yourself, and it will have nothing to do with income-based, rental or anything from the property. So there's kind of two distinctions between the commercial and the residential. My residential company is called Simplify Partners LLC, and that does all the Fannie Mae, the Freddie Mac, and of course non-QM, but that sits more on the residential side of things, and the Austin Associates Realty Consultants sits more on the commercial side of things, where we do all kind of other stuff, including SBA loans, which are fantastic. It's a great way for someone starting a new business.
They have the best rates usually,
It's not about the rate.
No?
It's not about the rate. The SBA loan, my favorite feature of an SBA loan, and listen good, this is important, is you can qualify based on projected income. And that's insane. And that's insane. But that you have to call me to talk about that.
I like
because
that. Yes.
That's a little secret.
But that's
projected income.
Yes.
So it's an interesting concept. You can't tell a bank, hi, I think next year I'm going to make $1 million, so give me a loan today. You have to show 2 years back. You have to show a history. Whereas in an SBA loan, you can basically have a 3-year forecast or a projection for the next 3 years.
And we all have projections.
We all have projections. But again, in a business, like I want to open a restaurant. Well, did you have a restaurant before? Yes, I did. I have 2. Oh, so let's look at your performance on those restaurants.
So they look more at the profile of the company, or?
I mean, it could be a brand new.
Okay.
You could be brand new, but look, at the end of the day, lending in of itself has to make sense, right? We're not going to lend people with bad credit $5 million and let's hope that they pay. So people with bad credit, banks don't like you. I'm sorry. And fix the credit up, show a good history, and then you can talk. People who had a bankruptcy, people who had a foreclosure, those are very tough people to get loans, and those usually fall into the hard money world because no one else will lend them. But people who have good experience and have a nice resume from my mortgage is good, I pay on time. My credit cards are paid on time. My car payments are on time. Likely, you're not going to default based on history. Anything can happen, of course, but based on the history, you're going to probably be more likely than someone who has bad credit to pay your debt. So when you come into a SBA situation and you say, look, my business has performed well in the past and now I want to open a second business, or I think I want to basically start a business, right? And I need you to help me raise the capital, whether it's $300,000 or $3 million, it doesn't matter. You still have to basically have a business plan, have a projection, and basically be able to present that to the lender. But that's kind of what I do. And when you come and sit down with me, I'll tell you what your chances are of getting, the loan on an SBA, because you can actually use the projections, but you have to have, like the whole picture.
I love
right?
it. I love it. Ron, as someone who has advised large corporations and banks, what are the trends that you see that are coming to Florida's real estate and mortgage market?
Absolutely, it's a great question. So if you want to talk and focus specifically on Florida, I think Florida has had its challenges, and the challenges have come from, obviously, I think they started way before the collapse of the building, Champlain Towers, but that kind of opened up a lot of the can of worms for people who were doing this deferred maintenance, Band-Aid, fix-up on the buildings. Now, Florida, I don't know the stats exactly, but I think that it's 70% or 75% is condominiums, right?
Yes.
Especially in the greater Miami area. So, that's been haunting condominiums. So my trend and my advice is I'm very happy to see that there's a lot of new development in Miami. And I think that how you avoid getting yourself in trouble if you're looking to buy a home in Miami, especially in the luxury market, is try to buy in the newer buildings, like something that's like less than 20 years old. And the newer the building, the less, I would say, likelihood of you getting a surprise.
Yes.
Right? Because we all know that the buildings on the water seem to deteriorate very fast. The maintenance is very expensive, and that's okay.
The insurance is
Right.
also very expensive.
Right, and that's okay. So now, with the addition of the insurance and the property values since COVID, everything spiked. So now everybody's tax bills went up. So I think a lot of people got smacked, and they got smacked pretty hard because the building's insurance goes up, therefore your maintenance has to go up. But now you have this, you know, the challenge of the 10-year plan and the budget and the reserves and just so many things going on. So my advice for the trends in Miami is try to buy as new as possible. Even if it's a house, as new as possible, because you have less likelihood of, you know, that torrential rainstorm in the eyes of an insurance company. It's going to tear apart a 30-year-old house. It's not necessarily going to tear apart a 2-year-old house because it's built differently, right? It's built to withstand that. So I think that's the main challenge in the Miami market right now, and I'd like to see DeSantis come through on his promise, where he's going to chop those taxes down. And I know it's not going to.
We're all waiting for that.
Everybody is. Everybody is. Especially if you're
Yes.
Homestead. I mean, you
Yes.
got to be counting the days.
Yes.
So I think that's going to be great.
I'm one of them.
Yeah. Listen, Miami residents are probably like counting the days, but. So I'm very hopeful that, you know, DeSantis is a great leader for Florida. I think he's a fantastic governor, and I hope he makes good on that promise to reduce the taxes and maybe some legislation to help, you know, ease the pain of all these rising costs in Florida. That's my main concern.
You know, there are a lot of businesses and companies that are coming to Florida,
Yes.
to Miami specifically,
Yes.
like Amazon just. They're going to open a huge offices in Wynwood. You know, Citadel is coming here in Brickell. So that's a huge trend too that is coming to the next year.
Listen, there's definitely
yes,
a lure in Miami,
yes.
right? The young people who were in corporate America definitely would rather be here than anywhere else. There's no questions about it. The question is, can you find your lifestyle here? Can you find your groove here? Can you make money here? Can you live the life you want to live here? And part of that is you know, you can make $100,000 or $200,000 a year. The question is, how far does that get you?
Yes.
And that's, I think, people's main concern today is, yes, I like Miami. Yes, I want to live here, but too expensive, or it's too challenging, or for whatever reason.
Last week I read something that said, I'm going to work so hard that Miami is going to feel cheap for me. And I was like, yes, it's crazy. You're from New York. Do you think Miami will be, they call it, how is it, like the next New York, like the next sunny New York or something like that?
I mean, look,
What are your thoughts
we're sitting here in
on
Brickell
that?
right now, and you know, Brickell definitely has a resemblance to Manhattan, to a New York City vibe, right? It's just the weather's better, right?
Yes.
And you know, you can go to the beach and anytime you want during the year for the most part, right? But I mean, look, you have your fair share of challenges here, right? Nothing is cheap, right? Like it costs as much to live in Brickell as it does in Manhattan. Right? The rents are not cheaper, the insurance for your car is not cheaper, the restaurants are not cheaper, but it has elevated to a very high level where if you asked me where would I rather live, in New York City or in Miami, I pick Miami every time, right? But where do I prefer to like work and make money and where the people are really the hustlers? It's definitely New York, right?
Okay.
So, you know, it's a different mentality. You know, the New York mentality is the killer, right? When
Yes.
people come to Miami, I think they relax a little
Yes.
bit more, right? And it's a good thing.
I agree 100%.
Yeah.
Yes.
In New York, you just don't relax. You just work. You just grind it out. Yeah.
Okay, and last but not least, what is luxury living for Ron?
Listen, for me, luxury living.
Not luxury.
It's luxury.
Luck, which is the mix of luck, luxury, and living.
Yeah. Listen, to me, it's just finding all the elements that you look for within your lifestyle to make you happy. And if you find that, then I say go for it. So when you talk about living, right, we all like to live a certain way. Some people like to go, you know, shopping a lot, and that makes them happy. And some people like to go on vacation a lot. And, you know, some people like the beach. And I think, luxury living, or luxury living as you like to call it, I think it's just, if God gave you the luck that you can live in Miami and, you can find a beautiful place to live where you feel like you're actually living your best life, then that's what luxury living is. You don't need more than what you need.
I love that answer. I love it. Thank you so much for being here.
Thank you for having me. It's been great.
It's been a pleasure.
Absolutely. Same here. Always a pleasure.
Thank you. Thank you guys for watching, and see you next time.